So you bought a new house or you're gonna build a new house and you're not quite sure what type of insurance you need, whether the agent's gonna take care of you or if they even know what coverage you really should have. So in today's video, we're gonna talk about those options. There's really two ways that it can go and they're completely opposite. So let's dive right in. Recently, I did get a few donations from you guys who bought me cups of coffee. I appreciate that. I'm actually just coming out of being under the weather, so it's really helpful to drink. I'm on my second cup in the last 15 minutes, so I'm definitely ready to dive into these topics. So let's start with the first person that bought a new house, because that's probably the most common, and then we'll dive into, I'll timestamp the new built or construction being built. And it's also called a builder's policy. So I'll link that below. So if you guys want to skip past the new build, although I would recommend you watch it first because you're going to need that soon. So we'll talk about that in a moment. If you're starting off with a new house, congratulations. That's an amazing deal. That's a great thing to have. There's not a huge difference as far as the actual insurance goes on that home versus a house that was 20, 30 years old. Now, the price does make a big difference. You're going to see about a 30 to 54% discount because everything's new. Now, that doesn't mean that there's not going to be any problems, and part of it could be under the warranty with the builder, but there could be pieces and a lot of things that happen that have nothing to do with them. And you may find yourself headbutting at that point to find out you were or weren't covered correctly. So you got to be a little bit careful on what coverages you go with. For those of you that are here for just the best deal and the best thing, I'm going to tell you right now, if you're selling Progressive or if you work with Progressive, they give the largest discount I've seen for new builds. So if the house has updates or it's a brand new house, you're likely going to see a few $100s. I've seen it up to, I think, $300 or $400 off right up front. Now, that doesn't mean other companies aren't competitive because it depends on the state that you're in, but it depends on what company and what area that you're going to compete with. So getting the best deal is going to depend on where you live and the company that you go with. But to kind of give you some of the most common, according to Zebra.com, they say Nationwide, Progressive, Travelers, and also Allstate are some of the best rates where you're going to see that 30 to 40 some odd percent cheaper. I actually have an app that shops all of those companies, so you can just type it in once and check them all. I'll put that in the description below if you guys don't have an agent that you're working with. Obviously, if you have somebody that you're dealing with and you like that person, 100% go that route. This channel is not here to get quotes. It's more so to teach you the advice and give you those pieces. So national average for home insurance, it's about $1,250, I believe, or 12 something this year. And it's gone up a little bit because of the cost of the homes. Well, if you have a new construction, you're in that $800 to $900 range. Obviously, if the house is a lot more expensive and it's a $9 million house, you're going to pay a $2,500, $3,500 every year for that versus the $900, which is your average. So you're going to see that pretty large discount. Although I don't condone cutting coverages, but if that's still too high for you and you need to cut some things down, there's a couple things that I would do if you're trying to lower the cost. Number one, the first thing I would always do every time, instead of changing your coverages, keep your $500,000 liability, keep your whatever the house value is, keep an extra 10 to 20% in replacement cost. Those will give you just some benefits. Keep $10,000, $15,000, whatever you can afford for water backup, even if you're in an area that doesn't necessarily have it. It's not flood, we're talking about water backup. Keep all of that stuff, but raise your deductible. If you need the price to be lower, do a $2,500 deductible. If that's still too high, do a $5,000 deductible, do a $10,000 deductible, whatever fits that area. Now, I know that you're not going to be able to come out of pocket necessarily with the $10,000 or the $5,000. So make it fit whatever your budget can be, but just make sure it matches what you have for the insurance, because you don't want to give up the $500,000 liability to $300,000 to save that $80. You don't want to give up the $10,000 water backup for the $5,000 water backup to save that extra $60, because you could just do a larger deductible and have that extra $200,000 worth of coverage, have that extra $5,000 to $10,000 worth of water backup. Those are more important, even if you have to out pocket more money in the end, because it's going to save you possibly hundreds of thousands of dollars versus trying to save a few dollars. Hopefully that makes sense. Some of you are going to hate that I said that, but it's just part of the way. That's the number one way to cut the home insurance down without affecting your coverage. Now, if it's the coverage that you need to piece off, then you're going to be looking at the individual pieces. Most agents, and I included, would typically sell you a package, a platinum package or a gold or a silver, whatever they call it. It's a platinum plus, select plus. There's totally different names for all of these companies. And it bundles everything together. It usually gives you 25% replacement cost. So if the house was a $100,000 house, I know it's usually more, but it would give you $125,000 worth of coverage if it's total loss. So if it's $200,000 house, you're gonna have $250,000 in total replacement costs. That's if the whole house burnt down and it's a total loss. If it's just the kitchen, then you're covered up to your $200,000 amount. You have the water backup typically included. You usually get an increased amount of jewelry. You usually get increased of cash on hand. You usually get the codes that are increased. I can't remember the name of it right now. Put that in the comments below, those agents that remember. It's where if the code for running a line or something has changed and they have to reroute something. So we're talking about that. You're getting usually more percentage towards if you have to get moved out of the house while it's being fixed. So that's the loss of use portion. The only main things that you're typically not going to see increase or you're not going to get a lot of coverage for is something that's become more popular today, which is called service line coverage. And service line coverage, I'm not going to dive too in depth. I'll put the link to the video up here, whichever side it's on, and it will go over what that is. But that's a possibility where most people are getting that coverage just in case there is an issue down the road or you have to dig up your grass because a line is breaking or something happens, then you would have that extra coverage for that. And the last part that I would look at is the roof. Now, this is something that is completely debatable. Half of you are going to love this, half of you are going to hate this because their brand new roof, I like to cover it completely. Don't worry about it. It's cheap enough. Just get the full coverage on the house and be happy. Some people, because it's a brand new roof, the odds of it breaking or having shingles lift is probably under a little bit of a warranty through the roofing company anyways. And they'll do what's called a actual cash value on the roof. And what that means is it means the roof is covered just like your car insurance. Typically it's replacement. And if you have shingles that rip off in a windstorm or hail damage or anything like that that happens, the roof is completely covered 100% up to that. There's even something called matching, which we'll get into in the video here if you want to learn more about the roofs. The actual cash value is going to lower the cost of the roof because it's only covering what the value of it is today. So today it's a $20,000 roof and it's covered for $20,000. Next year, it might be only covered for $18,000 because it's a year older. 15 years on a 20-year roof, now later down the road, it's probably only covered 50% because the roof is starting to deteriorate. It's getting near the middle to the end of its life cycle. It's got a higher chance of having a problem. Here's the thing. If you are organized to the point where you're willing to do this, you can start off with an actual cash value and then over a few years, you can change your mind and put it back to full replacement cost. Now, I know I don't typically talk about that, but this channel needs to at least be open with what your options are. I am telling you, I always choose the full replacement cost unless I absolutely have to save a few dollars on a policy, and then it's raise the deductible. If that's not enough, adjust some coverages. If that's not enough, let's look at the actual cash value on the roof. The bonus tip, thank you for staying this far through all of that data. We're going to go into new construction next, but keep in mind, there are two deductibles in house insurance. So you have the standard deductible, which is your all perils deductible. That's the name of it on your policy. And that covers all perils. So anything that's typically, if it's an HO3 policy, anything that's listed on that policy is covered. And so you've got all that coverage, great, but then there's the roof on a separate coverage deductible. And if you don't see a line or if it's crossed off or anything like that, then with almost every company I've worked with, the deductible defaults to the all peril deductible. If somebody's changed it, this is where agents tend to trick some people if they're tricky agents, is they'll do a $1,000 deductible on the house, that's the most common, but then they'll do a 2 or 5% deductible on the roof. And if you have a $200,000 house, you're talking $10,000 deductible on the roof, and that's not good for anybody. So be a little bit careful, look at your policy, make sure that you don't have that high deductible unless it's something that you chose. Otherwise, let me know in the comments below if you have questions. Let's dive into the portion of the new build. So for sake of this video being too long, I'm actually going to make a separate video and I'm going to make it accessible right away. So I'm going to hide it so it doesn't post on my channel yet, but you can click it here. I'm going to put it right here for you guys. Go ahead and check that out if you want to see the new construction, new build. If you are building a house, you for sure need to watch that section. Also, now that you've gotten the house built and you're ready to go, you're gonna wanna know what discounts are available to you. I know we talked about a few of them, and what I'm going to do is I'm also gonna link a video right here that is gonna go through the 101 of home insurance. You may wanna skip past that if you already know all the coverages. There's a playlist as well, and then there's also a discounts one where we go over the discounts for home insurance to give you guys the best option to get the best rates. Otherwise, thanks for watching, guys. The thumbs up helps me the most with the algorithm. If you are interested in watching more of these videos, hit subscribe, turn the bell icon on so you don't miss future videos. Otherwise, I'm Mark with Think Insurance. I'll see you in the next one.